Hey, welcome traders. My name is Ryan, and I'm going to be kind of walking you through some charting, some technical analysis. So I do not want to bore you really quickly. I want to get right into actually doing this stuff. But I've been studying technical analysis for a little over 2 years now. I've been trading for about a year. I started trading regular stocks, regular securities, things like that. And a buddy of mine got me into cryptos. So my videos here are aimed at both traditional stock market and cryptocurrencies. Technical analysis, it's universal. It's relative to both. So if you're trying to learn some technicals on trading your stocks, if you're trying to learn some technicals on crypto, this is applicable to both. And kind of the inspiration for this was I'm part of a couple of groups on Facebook, and a lot of people ask questions. They post a chart. They ask for people to critique, their analysis. And I love commenting. I get a lot of questions, and I've noticed, especially in the crypto world, there's a lot of misinformation or lack of information. I guess a lot of you guys don't realize you can figure this out by searching stock market videos and stock market information. It's the same exact thing. If you're looking at right now ADX USD, this is the stock market. If we take this and we go to Apple, okay, it's the same thing. It is the exact same thing. It works the same way. So yeah, there's that. Oops, I spelling stuff wrong already. Doing mistakes already. All right, so I wanted to get kind of right into this. I plan on doing a whole video series or a lesson series, but I wanted to start out with a couple of basics I feel are really important to the new trader. This is really focused on the new trader right now. This is the market concept, supply and demand, support and resistance, charting styles. And if we get a little bit of time, if I don't run on too long or bore you, we're going to do some basics of indicators like moving averages, RSI, stuff like that. I don't want to get too far into that because I'd like to go into it in depth, and I don't need to make a 3-hour video. So with that, here we go. So in front of us, obviously, we have ADX. I chose this because it's been popular the last couple of days, and it's got some really good action. I typically don't look at charts this way. This is a candlestick chart. I don't usually use green and red, but I'm using it because that's more than likely what you're going to see on Bittrex or a Blockfolio or whatever else you're using, and it's just easier to relate to it. But really, that was just for the opening. So what I'm going to go do now is I'm actually going to change it, and I'll kind of get to why. Personally, I think it's easier. I think it's easier to decipher in black and white. Okay, we all know what black is. Okay, black is down, white is up. You can clearly see that on the chart, but it's a lot easier on the eye. And when you kind of pull back and you scan back, for me, it's easier to see what I'm looking for. So this is a candlestick chart, okay, and really quickly before we get into support and resistance, which I know is a big question for a lot of people. A lot of people overcomplicate it, confuse it. It's not very complicated. But before we do that, I kind of wanted to get into market theory, if you will, really briefly. It's my idea, it's my belief that the more you understand something, or the more information you have about something, the better you see it, the more clearly you see what's happening. And that's in my experience the key to the market. Okay, because if you just look at this chart, it's just a bunch of lines. Like, who the hell really knows what it's doing? It's a bunch of randomness. Okay, but it's really not, and that's the whole point I'm trying to make here. So the concept of the market is supply and demand. That's exactly what it is. You have a supply of something, and you have a demand of something, okay? And when that demand happens, you get these moves like this, okay? Our supply is plentiful, it becomes demanded, and we start dwindling our supply, and the price goes higher as a result. If you want it, you're going to pay more. So that's the most basic concept, and you break it down from there, okay? Down here, all right, we have a supply. The price is low. Nobody really wants it. So what do you have? You have traders accumulating shares, okay? Something happens. It doesn't really matter what it is. There's a press release, there's a merger, there's a new piece of technology, there's a partnership. If you're using crypto, Civic's going to be used in McDonald's, or if you're trading a stock, on the NASDAQ, it's a pharmaceutical company got FDA approval. It doesn't matter. All of a sudden, people are interested. So you have all this accumulation of shares. So people start wanting it. Well, people start selling it to the people that want it. So it's being bought. As it's being bought, the price keeps climbing and climbing and climbing and climbing. What we call this, really, is what I was taught, this is accumulation, okay? Then after accumulation, we have public participation, which is this right here. This big leg up is the public participation. And then once that happens, and the fire kind of dies down, and people stop losing interest, or we're not sure if it's going to go higher. We don't know. We don't know if it's going to continue going up, so we're not sure if we should buy. And people start taking profits, okay? You have this distribution area right here, okay? And I know this is boring, and if I can click on this, I know this is boring. I understand that, but it's important. It's important to understand. And the reason it's important to understand is because you need to know where you are in the market. You need to know where you stand in the market. If you open a chart up and you're looking at a stock, or you're looking at a crypto, or you're looking at a currency on Forex, it doesn't matter. You need to know in what phase you're in and what is happening, so you can sort of anticipate what you're going to do. So we have this accumulation phase, right? Oops, lost it. This accumulation phase. We have this public participation phase, and then we start to have a distribution, okay? Then we go back into public participation, and then we have distribution or accumulation. It doesn't matter what you want to call it. Accumulation and distribution are almost the same thing. It's two sides of the same coin. Accumulation is people buying their supply, and then distribution is the people who have bought their supply selling it to more people that want it. And the reason this is important, okay? And let's get to that and stop with the boring shit, okay? Pardon my French. I curse a lot, so if that happens, I apologize in advance. I have a potty mouth. I'm trying to keep it FCC compliant and safe for kids in the room, but the slips may happen. So you don't want to be this guy. You don't want to be this guy that buys there. That's not who you want to be, okay? So it's good for you to know what phase of the market you're in. And other things tell you that, technical indicators, things like that, yada, yada, yada. But that's the basic ebb and flow of the market. And you can go way back, and you can map that out. You got accumulation, public participation, distribution, accumulation, public participation, distribution, public participation, distribution, okay? And it just continues that way. So if you see yourself down here in this area, and I have to get a better drawing tool, I apologize, but if you see yourself down in this area, okay, you know, if you're paying attention, if you're following what's actually going on, if you're paying attention to the actual psychology of the market, you know you're in an accumulation phase here. Okay? You know this is trading sideways. And you know once you have a catalyst, you're going to move up. Okay? But you also know if you're looking to take a profit, if you're looking to day trade, which would be buying at 12 and selling at 1 in the same day, if you're looking to swing trade, which would be buying on Monday and selling on Wednesday, you might not want to buy in here. It depends on your plan. It depends on your style of trading. And we're going to get into that in another video because that's a whole nother topic. It's a whole nother interesting game. So the next point, okay, we have that. We have our market ideology or our market philosophy or our market concept is supply and demand, okay? If you want to make money, you have to buy when it's in supply and you have to sell when it's in demand. Okay, keep that in mind. That's important. It's important later down the road. So on to our next point of interest, which is support and resistance, which I know a lot of newcomers struggle with. I know I did, at least. When I first started looking at charts, something like support and resistance, I'm like, well, how do I figure that out? Like, how does that work? Okay, I'm looking at this chart, and where do I want to put it? I mean, do I want to put it here? I mean, do I want to put it here? This looks like a good spot, right? This is what I find. Okay, first of all, support and resistance, it doesn't have to be a specific price point. It doesn't have to be $1.07. Okay? It doesn't have to be that specific. It is an area. Typically, support and resistance is an area of price action. And what I mean by price action is going back to supply and demand, our basic market fundamentals. This could be defined as price action. Okay? We are trading sideways. Overall, we are trading sideways. Okay? Clearly, now, I don't know. I mean, maybe to the untrained eye, it doesn't appear that way. But I would say this is a bottom. Why? Because we're not heading lower. We're trading sideways. Okay? Other points of price action are, let's go back to our little brush. We're gonna paint a happy little bush right here. Happy little line. Happy little pointing line. Okay, it was lame. That was a reference to the guy who used to paint happy little bushes. I forget his name. So anyway, this is a price point here. Why? It's a point of reversal. It's a high. It's a market high. We have another high right here. We have another high right here. We have a low right here. We have another low right here. These are reversal points. Okay, why are these important? They're important because of past price action. I hate that. I hate that so much. Go away. So they're important because of past price action. All right? And I'll explain that. Let's go to a 30-minute chart. So we need a little history. This is why stocks sometimes are easier to look at, because there's a lot more history with stocks. So a lot of crypto is relatively new, so you don't get a lot of market history. But look at these lows. Okay? There's a couple of them. And actually, let's go ahead and start drawing out support and resistance lines. Let's do that. Look. Okay? Look at all the points that touch here. Here. This candle wick. This candle wick. This candle wick. This one. This one. This one. This one. This one. This one. This whole area is using this same low. See? Look at that. It's that simple. Okay, thanks for watching the video, guys. It's that simple. These are areas of previous price action. These are areas where other traders felt it was a good place to buy, and they bought here. So this came down, touched this area, people bought it. Okay, they took profit, it came back down. It worked the last time, so why not do it again? They bought it here again, it came back up, it came back down. It worked the last time, why not do it again? Came back up, came back to over here. It worked 4 times before, 3 times before. Why not do it again? And they came back up with it again. Okay. Now, where's our resistance? This one's a little trickier because this is actually a chart pattern, which I don't really want to get into right now. It's a whole nother video. Why? You have a high here, a high here, a high here, a high here, a high here. Okay? Technically, for the people who may know something, technically we're doing this, right? We're doing something like that, which will be a descending wedge. Okay, but that's a chart pattern. This video isn't about chart patterns. It's about support and resistance, so I don't want to get anybody confused. But that was just for the sake of argument for anybody who wants to sit there and go, oh, well, that guy didn't see that descending wedge pattern there. Okay, that was for you. So I would consider that a top. We have a little bit of a channel going on here. Why? Because that's where we took profit once, twice, 3 times. We tried to come over it here. We failed. We came back down to our support, came back up, took profits, came back down, and then eventually you see what happened here. We broke support and we rode down there. Okay? It's really that simple. Now, let's take it one step further. And as a sort of a seasoned trader, this is what I see. And I just want to point this out. Okay? I think it's important to note. Because it's sort of, let's go to the 1 hour, because that's what shows it the absolute best, and we can actually line that up better. This shows, I want to show you how the market moves in relation to support and resistance. So we have a pattern working down here. We have our area of accumulation. Okay, we start to make this pattern here. This is called the fry pan bottom. That's usually what they call this. If you look up charts, you can go to finvids.com. There's a lot of different places, and you look up fry pan bottom. There's other names for it. But this pattern starts to happen. People start to buy in. You get this big move up, okay? And we go all the way up to $1.10. Now, once again, I'm going to get into it real quick, just so everybody follows along. This video is not about candlesticks. But if you don't know candlesticks, this example is not really going to help you. So if you don't know candlesticks, it's this simple, okay? You take this white candle right here in the center, all right? I'm trying to zoom in the best I can. So this white candle here, this is the body of the candle. A white or a green candle, depending on what colors you're using, indicates that the closing price was higher than the opening price, okay? So the opening price was down here at $1.06. The closing price was the top of the candle, which is $1.10. And these lines, or shadows, or wicks, depending on who you speak to, those are the lows and the highs. So the high went all the way up to $1.15, which was up here, and then the low went down all the way to $1.02, which was down here. And then a black candle is the opposite. Black candle is where the closing price is lower than the opening price. So we opened up here at $1.10. And we closed down here at $1.03, and our low came all the way down to 94 cents. You can see by this shadow here. Okay, so I put my line on the top of these candles because we have this consolidation, all right, down here. We have this pattern forming, this fry pan bottom pattern, and we'll get into that later in another video, more in depth. We have this big move, public participation. Everybody's jazzed up. It's all over cryptocurrency traders' Facebook page and whatever else. And everybody's jumping into it. Bam, 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 bam. We're moving all the way up. we test this 110 once. You see it right here. See this wick? The high of this candle is 111. We come back down. We get some sellers. Okay, can't close over here, so we get some sellers. But people still want to buy. And remember what I said about knowing where the market is, so you don't end up being the guy who buys right here. And that's what this is. Okay, people bought in. We tested it again. We failed. We came up over it, but we couldn't close over this line. We couldn't close over $1.10. So we sold off. We consolidated, okay? And then we made another push. Right? We pushed back over. We actually broke that 110. We broke resistance. And we came right back down and tested it. And if you look, the reason I wanted to show you is because sometimes it is specific. Sometimes price is very specific, and you can plan what's going to happen. So if we put that line right on those two candles, where we came back down to retest support, I mean, that's really close. That's really close. The low was 110.39, and this line is 110.12.3. Okay? We tested support, we bounced off of it, and we pushed higher. And we made our new high here, which was 150. And I'm going to draw this line because I'm going to make another point. I'm going to draw it at 150. Even though it's a little bit below 150, I want to make a point. And I'm actually going to move this line to 125-ish, which is actually right on the top of this candle here. Because we did the same thing. We made this push up and over, we retested, and this is actually what's called a J hook pattern. And again, we're going to make a video regarding that. I don't want to get too much into it and give you too much information. There's a lot of information to cover. Okay, I'm going to make it a point right now to say this is a skill. I hope you're watching the video. I know there's a lot of videos. A lot of times you just want to go and you want to watch a quick 5-minute video on a topic, and that's cool. That's totally cool. I've been there. I get it. My whole goal is to teach people to understand the market, not just to be able to go and regurgitate something or repeat something that they see. But my goal is for you to look at a chart, look at a stock, and understand where it is, what it's doing, and where it may go. So that's the goal here. So we push up, make this J hook pattern. And it's obvious why they call it that. It looks like a J. It looks like a fish hook, a J hook. So we have this J hook. And here's another one here. This one looks like a turd-covered fart, but nevertheless, it's a J hook. This is beautiful. This is a beautiful J hook. But they're all over the place. These are patterns that you'll notice once you understand and you start learning different concepts, different patterns, candlestick patterns, charting patterns. You'll notice these things. You'll see these patterns. You'll see them start to form. You'll plot your support line, or you'll plot your line right at this high, and then you'll see it come down. You'll see the volume drop. You'll see the spinning top candle buy signal. You'll put your buy right over the candle, and it'll shoot up. Okay, and you'll take 10% or 15% or 20%, and you'll sell your position before any of this even happens, and you'll go, oh my God, this is insane! I can materialize money. It's a pretty great feeling. So going back to this, I'm going to set my lines in some certain places because I want to make a point. That I think is very important. This is something that I learned, and it's a good guideline. It's a good guiding force to help you make decisions in the market. So what else can we do? Let's even put a line right here. Let's put a line. Let's put a happy little line, happy little support and resistance line right here. And the reason is because we came up, we broke that area, we retested it, we moved back up, we tested it, failed, tested it, failed, tested it, failed, broke through, came up, made our little J hook at the high here, and then we pushed past the next price. Okay? And now what we're doing now is up until this hot mess happen here. We were consolidating, okay? We were accumulating or distributing right around the $1.25 area. Back and forth, back and forth, back and forth over the $1.25, okay? The reason I chose these prices, 75 cents, $1, $1.25, $1.50, is because those you're going to find are natural areas of support and resistance. Every 25 cents, and more so, okay, incorrect word, especially at the dollar, okay, the whole dollar and the half dollar. Those are going to be areas of natural resistance. If you're going from 90 cents to the whole dollar, you're going to do this, okay? You're going to do this fail, 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 fail. That, okay? The same thing with the 50 cent mark. You're going to do this and you're going to consolidate under it or around it. They're going to be harder areas to traverse. And if you ever want to check your... Why won't this load? Come on, nerd. Okay. If you ever want to check your support and resistance, go back in time. Okay? Here's your $1.50. And I know this because I've made a couple takes of this video, but it's not rocket science. I can show you this. Okay? There's $2. There's that high. There's that candle wick. Testing that, $2. Failed. Came back up and broke it. What do you think the next high is? It's $2.50. The whole dollar and the half dollar. Okay, this is not rocket science. Trading is not easy. Trading is hard. Okay, trading is hard. But looking at a chart and understanding what's going on, it's simple. It's not rocket science. It's just a stock market. Okay, it's very easy to overcomplicate. But let's go look at our lines. Right. Here's the whole dollar. We have all this price action right on the dollar here. We have this candle wick here. It's close enough. I'd call it. Okay, I that would be relevant to me. You have all this price action here. You have all the right here, this high. That's why I said it's an area. Okay, because if it's really the dollar it's focused around. But if you move it, see how we line up with this high, this low, this low, this high over here, this high over here, this consolidation. That's it. It's that simple. We can move this up a little bit. There we go. There's the high. There's the high. We retested it, failed. Retested it, failed. Okay? That's 75 cents. Here's the here's the same type of scenario as as previously. Okay? We come up, we test it, we fail. We test it again, we fail. We consolidate, come all the way down here. If you look, this is really a lot harder to spot, but this is a little fry pan bottom. It's a little bit of a fry pan bottom. Boom, the breakout. We come up, 97 cents, just under a whole dollar. Can't make it. We fall back down to about 68, which is just about the high of this first push. And then we come and we push back over. Support and resistance is that easy. It's just looking at it and recognizing areas of interest, highs, lows, things like that. I mean, it doesn't get any simpler than that. You don't have to overcomplicate it. Now, a couple little pointers I want to point out. If you want a guide to where you should put your lines, okay? Let's delete these. A couple of things that I was taught was you want to use extreme lows, extreme highs. All right? Or you want to use flat top candles. Now, the most powerful ones are going to be, let's see if we can find one. New. That's funny because usually you see them. I mean, this would be one. This would be here. Okay, this would be an example of a shaved bottom candle. All right, and that's very convincing. And the reason that's very convincing is because if you look at all these candles, price came down, it tested, but it never closed there. This opened here and shot up. it never even attempted to go lower than the open. Here, we opened, we went lower, we came back up, and we closed. Same thing with all of these. And the same is true with bearish candles. And if you don't know those terms, I'm sorry, I probably should have said them before. The candles that are moving up, meaning closing higher than open, okay, those are bullish candles. It's a bull market. When a market goes up, it's bullish. When it goes down, it's bearish. So your white candles or your green candles going up are bearish candles, and your black or red candles going down. Excuse me, I misspoke. Hold that thought. Your candles going up, your white, your green candles, those are bullish candles. Your candles going down, the black, the red, whatever color you choose, those are bearish candles. Okay, bears go down, bulls are going up. Okay. Here's another shaved bottom. Right here. This guy right here. Okay. Here's a shaved top. That means it opened and just tanked. It never even tried to go higher. It just dropped like a rock. Same thing here. We get to this top, boom, drop. And make a note of that, because when we do candlesticks, you're going to find out that's personally one of my I will not take a trade if I see this. I call it the Twin Towers. We all know what happened there. Okay, it's going down. Both towers are going down. All right, I call that one the Twin Towers. So when you see that, bang, it's going down. You see it here, bang, it's going down. Bang, it's going down. So for me, that's it doesn't have to be that way. It could be like this one. But as a general rule, if I see that happen, I'm done. I'm out of the trade. So anyway, going back to what I was saying earlier. I got way sidetracked. Really sorry. Okay, so look at this extreme, this hardcore wick over here, right? I put my line right at the top, right at the high of that, right? And if we move back down, we can see it was the high here. Okay, we failed, but we came back down and moved up, and then it became support. Old resistance becomes new support. Okay, it was support here, it was support here, it was support down here, and then finally we broke down a little bit and came back up. But also, I like to use, and I'm sorry if I'm making you dizzy. It's not the easiest thing in the world to traverse trading view sometimes with the mouse, but okay, the other thing I like to do is I like to use the tops of those twin tower candles, if you will. All right, and here we go. There's a resistance line there. We came down, we touched support, we tried to come up, we tested this resistance line, but we couldn't close over it, and we came back down and we hit support again. But that's it. I just drew a support and resistance line, and if you were anywhere in here at the time of this is on the hourly, that would have been your support and resistance. Okay, and you'd have known if it broke this support, you were going to head lower. If it broke the resistance, you were probably going to head higher, depending. Other factors are there. I can't tell you how to trade. I'm not a professional trader. I don't have my Series 6. So don't go and trade and say, "Oh my God, it broke resistance. I'm all in." Don't do that, please. There's other things that we're gonna cover in other videos. This is a very in-depth topic. There's a lot of facets to this topic, and you can see. Enough rambling. You can see it. There's the line. There's your consolidation at that line. Failed. Came back up, tested it again, went higher. And here we are testing it again, currently, AXD, USD. So if you're looking at ADX, okay, right now would not be the time to buy. I wouldn't buy right now. I would not buy this right now. The reason I wouldn't buy it right now is because I don't know. The market doesn't even know. If you look at it, there is no discernible. It's not really going down. It's not really going up. It's technically trading sideways. If you look at a smaller time frame, you can see that it's just trading sideways. It doesn't know if it's going up or down. Okay, so I wouldn't do that. And that's right under the whole dollar. It's at 99 cents. So if you break back over that whole dollar, you could you could ride all the way back up to $1.25 area where it was $1.15, $1.25. Again, previous points of price action. It's been around $1.15 for the past week. That's where it's constantly wanted to settle, right at this low of $1.15. So previous price action, okay? It's not rocket science. Previous highs, previous lows, okay? If it starts going down, if it's been at 115, okay? If you checked Blockfolio, okay, or FinViz, or TradingView, or TD Ameritrade, whatever you're looking at, if you looked at it 4 days this week, and it's been at $1.15, and you come back up, if you want to know where to buy it, it's probably at $1.15. Okay? A lot of miscommunication on the topic, and it doesn't need to be that complicated. It's actually very simple. So this video is getting long, and I hope I covered it. I was really trying to cover the basics of this. I really want people to understand this. Once you understand these little concepts here, it makes the picture so much clearer. You can actually look at a chart, and it's not overwhelming. So, and you don't have to use candlesticks. You can use a bar chart. Okay, you can use bars. Right, bars are a little different, and they're harder to read. You can see that it's harder to read. I don't personally use it. I don't care for it very much. You can use a line if you'd like. I feel that the line is pretty good at picking out support and resistance. If you look, I used to trade on Robinhood a while back, and I used to love Robinhood because I can see areas of support and resistance very clearly, and it also, I think, helps you discern chart patterns relatively clearly too. You can see the tops right there, you know. Do something like that. So there's that, and you have a lot of them. Point and figure is another one, which personally I don't use. But again, this is another one that is good for picking out patterns, apparently, so I've been told. I don't know if I necessarily believe that, but kind of. I mean, you can see these points, these circles, these X's and circles. You can see where they're all touching this area. Your X's are touching this line. So I guess, yeah, maybe if you if you can look at that without throwing up, I guess that's probably the way to go. But I personally use candles, and there's a reason I use candles, because there's a whole technical analyst aspect to just candles. There's books and books and books written on candlesticks, like this signal right here. This is a hanging man. They call this a hanging man. Okay? This is a hammer. You know, this is another hammer here. Didn't quite work out, but this is a hammer here. We could be moving higher. Scratch that. This is a hammer. Okay? And then we have a move up. There's your double top. Well, not really. This is really a double top right here. These are your twin towers, or more commonly known as your tweezer top or your double top. But we'll get into that. I mean, but you can analyze a chart just on the candlesticks by themselves. So we've covered a lot of stuff. I plan on making a dedicated YouTube channel to this. I plan on covering a lot more topics. I'm probably going to go ahead and open up a Facebook group. I'd like to open up a chat room, and I've done it in the past. I've made websites for other subjects, so I may start a website for this as well, where all the videos will be posted, and there could be some forums, some discussion, so we can all learn and grow together. And I don't plan on charging for it. I'll monetize it using commercials or something, advertisement, but I don't plan on monetizing it, charging a monthly fee. It's not really why I'm doing this. So anyway, if you have any questions, if you have any comments, if you want to call me a jerk, you got something negative to say, if you want to critique what I've done here, all that is fantastic. Leave it in the comments, and as soon as I have a Facebook or Telegraph or Instagram account set up specifically for this group, I'll let you guys know. And look forward to me in the future. I had fun, and we'll see you next time, and happy trading.